The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Day of September. Now we're into the second part of September. Very interesting what's going on here. That spike yesterday, that at this particular point, I'm still not sure whether to call it a rogue wave, Chapman wave, sudden spike to the upside when the trend in fact was down, because none of the other indices gave new either recovery highs or all-time highs. Only the Dow did it. There was some news event, some sudden buying that was bolstered by a news report. So we're going to be looking. This is really a very important phase, and I'm going to go through. I had a couple of questions, and I had a couple of things I wanted to mention. Hey, I'm first going to do this because I almost forgot about it, but I saw it in the corner of my eye. See this picture right here? Alston sale highlights hot city housing market. This is from today's Boston Globe business section. 3 buildings in the Green District. Never even heard of the Green District. Just off Com Ave in the Alston Brookline area. So this Green Street, these 3 buildings were purchased by National Development of Newton. This comes to you actually live from Newton, Massachusetts, the Garden City. So this company is evidently based in Newton, probably in Wells, in their complex in Wells. And what we're looking at here, they beat out 175 interested parties in wanting to purchase, at least showing interest in purchasing this property. Works out to about $520,000 per unit. That is under the Garrison Square. Never heard of the Garrison Square either, which was sold in 2010 at a record high of $612,000 per unit. And what was the quote? What was the quote? That real estate multifamilies, oh, and here it is, give stronger returns than stocks and other investments. All right, we're just going to put this aside. One little more piece of evidence that says we are on the way. We haven't gotten there yet, but we're on the way to becoming bubbleized all around in all the asset classes. Very interesting. Today the Fed comes out with their Fed speak. That'll be after 2 o'clock. And I'm going to do something else before I forget. Let me just quickly turn around here. I wanted to mention that there's this fantastic competition going on at TFNN. It is actually, it's called a trading competition, a virtual trading competition, because you get virtual money to use. But it really is an opportunity to experience another way of trading, maybe you can call it investing. If you sign up for the virtual trading competition, go to the front page of TFNN. You will gain exclusive access to the live web. Tom O'Brien will be hosting Thursday night, September the 25th, from 6 p.m. to 7 p.m., where he will discuss strategy on the Nadex platform and give an hour-long prep course to prepare everyone for the week of trading ahead. I mean, you can... this is amazing. Besides giving thousands away, there's a $10,000 overall package that's being given away, sponsorship here. I must tell you, this is a wonderful, wonderful opportunity to learn, to be paid maybe, to learn, and to get free information with Tom O'Brien. Hey, try it out. Go to the front page of TFNN. Meantime, back at the ranch. Oh, and you've got to do this before, I believe it's the 27th. I might be wrong, but I believe you've only got about a week to go in which to sign up. So please, you can't join midway. You have to have signed up before that Sunday night. The week starts Sunday night. That Sunday night. So here we go. The E-mini is up $1.50. they have to crack, this is December, they have to crack 2002.75 to get to a new leg up. The 120-minute chart is just made leg E. It's above the trend line resistance, and that trend line resistance going into tomorrow will come in at about 1985 to 1983. The MACD stochastic and the 120-minute chart are very strong, not so in the daily. The daily is going up without the veracity, without the strength of the technicals confirming. They are moving up, but they aren't really showing sustained strength at this particular point. Now, here's something else that I want to discuss. I had some questions about it, enough questions, but let me first look at my notes because, I'm pleased I looked at my notes. There was this program on John Deere last night. I can't remember where it was. Maybe it was on CNBC. It was a documentary. And I have to tell you, it was just fantastic. I've always wondered when I'm looking at large Boeing airplanes or anything that has size to it, that doesn't just work off size, it works off the mechanism, the machination. It works off being able to create instruments that are this big, 36-foot long rotor blades. I mean, this is just, the whole thing was just beautiful to watch. And the speed which was these huge monsters can travel at to get the wheat. Anyway, it was very exciting. Now, the other thing is, it was so interesting, our history. There are snippets that you can picture at certain times and then go back in history and look at them. In the Roosevelt documentary that's going on right now, there was a moment where you had FDR and Churchill together, but they were just in the picture together. They had met. And later on, when Frank became president, Churchill didn't recollect at all having met him, which was very disappointing to Franklin. Interesting that, huh? From one war to the next war. And the next thing I wanted to talk about is, let's see. Yeah, I've been talking about this for a while, but what a shock to see USX, which we owned way, way lower and got out with some profit, but not enough, go to 45, today's high. This is amazing. Today's high is 46.55, trading at 45.21, gap up leg D. I don't know what that is. Yep, leg D as well. No, it's a leg E in the 120-minute chart. I must tell you, that says something, because I had a target of U.S. Steel to 40.22, about 39 to 40, because it's a 200-period moving average that's been moving up over the year. But gosh, what did we have this at once upon a time? Way back. There it is. We had it a few times. Long at 25.25. Oh, we sold for a full 2-point profit, 7.9%. Kept the other half, and I can't remember. I think I stopped out of the other half for a much smaller loss. 25, almost a double. Can you believe it? We got out, never got back. He kept talking about it, blah, 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 but never got back in. That's telling us something about the economy up until now. So the Fed speaks this afternoon at... No, Pika asked me, is that the Yalta conference, Crimea? I don't remember it. I was busy working on my newsletter for tomorrow. That was last night, for today, that is. And I looked up and I saw, and I heard something, but the only thing I heard was that Roosevelt was very upset that Churchill never remembered him when later on, 20 years later, whatever it was, during the war, they were talking together. However, maybe you're right. I just don't remember it. I thought the picture I saw was them together on the war front, because I think England and the United States had representatives, and they were representing the United States. Anyway, then there were a couple of other things that I will get into. Doesn't have to be today, but on over. Oh, yes, I do. There's this guy who owns these casinos, Stephen Hung, I think his name is. He's put in an order for 30 Rolls Royces. Why? No one really knows why, but obviously you know why, because it's to get the high rollers to come in and then escort them around in the Rolls Royces. Not just 1 or 2 or 3 or 4 or 5, but 30 on order. So that's 15 million at least. Right? Oh, well, not bad. But that is part of this excessivity, that word that I made up 20 years ago, maybe more. And boy, is that ever going to become part of the vernacular over the next year. So let's just go through the numbers. I'm going to go through the numbers. I also wanted to go through, I had a number of questions that I'll answer now. What about the weekly? Is that telling us that we have begun a brand new buy mode confirmation in the weekly chart of the Dow? I'll get into all that. Most importantly, what I want you to look at right now is, let me get rid of this. Go out. You're out of here, mister. Save. Yes, I'll save it. Okay. The Dow is up 28 at 70,158, having made a new all-time high today. S&P has not done that. It needs to get to 2,000. Oh, I've still got 2,000. The cash index has to get to 2012. It's at 2001, up 258. The comp index is right now up it's up 6 at 45.59. You've got the gold is just I just don't see anything yet in gold. I'll talk about that as well. I'm going to try to get to all these things today. I hope I can. It's a very important session for many reasons, and I'll talk about what's going to happen in the last 2 hours. But let's go to the gold, which is acting okay, got support. The dollar has not, in 6 sessions, made a new recovery high. That is very interesting. And I was also reminded to mention, a number of people sent this to me. I also read it, that there's parking in New York for $1 million, just a parking place. All right, let's get back onto this. High-grade copper is now at 3.14. I think that high-grade copper is going to go under 3, the way I'm looking at it right now. Crude oil just kind of stuck there at 94. Now, bonds are up 830 seconds at 138.09. I'm going to go into that as well. Gee, I've got a lot to do, so let's just finish this up. The dollar is only up a penny at 84.24. And what am I missing here? And the euro is down a fraction. All right, that allows me to do this. I wanted to show you a couple of things. This is what my subscribers get every day. I've explained it. I had an arch formation. That arch formation was working perfectly until yesterday. It was matching exactly this particular candle right here. And that meant that Thursday, that's tomorrow, would have had that big ugly candle. But in fact, the spike to the upside comes under the aegis of, in the Chapman wave umbrella of terminology and methodology. This is it might turn out to be a Chapman wave rogue wave, except that today is the day. The latest it can be is that today, maximum tomorrow. Should see, and it shouldn't be a spike much more above 17,173, the high of the day. But in fact, this bar needs to close decisively lower, and then we need to not only take out 17,099, the 17,079, the 9-period exponential moving average, that maroon line. You've got to close decisively under it as the MACD deflects lower. This is really the clue of the Chapman wave methodology, that one of the technical indicators is assisting, like a right arm extension, allowing that.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. What I'm doing here, I'm going to do this because I had so many requests. We're going to make this a study hour, okay? So I won't be taking calls today. I'm going to just make this a study hour. Let's go to the weekly chart of the Dow and explain a bunch of things. If I take this pattern I've just cleaned up, I took a blank chart and I've just cleaned it up, and all I've done is I've taken two trend lines. I've taken it from the doji candle top of the week of the 3rd of January. There's a weekly chart of the Dow at 16,588. Price doesn't matter, actually. I'm not even going to tell you the price. Now, I've taken it the high of the 18th of August, the week of the 18th of August. Taking it from the three lows, and I love to go to the outside candles and the wicks themselves. If I hit a candle body, that's fine, but I like, first of all, to look at the wicks. And in this case, I've gone to the low of the 11th of October of 2013, the higher low of the week of the 7th of February of 2014. I'll tell you the price, 15,340, and that goes exactly to the low of the 8th of August at 16,333. And what we've got is, if I simply put in another parallel line, and I call it the inside track resistance, and I make it pink because you want to see that it's a different color. Let me just have a look here to see, are we getting this? Are we getting this? Are we getting it? Nope. Candle, one back, one in. All right, something's not right. Live feed, or it doesn't matter. So that, a breakout above this line, just making it as simple as possible. A breakout in the Dow above 17,383 in September would be very positive. That's number one. Number two is this becomes the red line. This becomes the green line right there. And we'll use that base of support right there. Look, each one of those candles hit that exactly, almost exactly, and exactly. So that makes this a valid one. They don't have to be equidistant. We're talking about equidistant. Very interesting article by Richard Arms in this month's Stocks and Commodities magazine. He's done something a little different with equivolume. All right. So what we've got is we've got a bunch of resistance. We've got really important support here on a short-term basis, on an intermediate-term basis on the weekly chart, around about 16,875. I've been using the 16,700 to 600 area as really important, regardless of what you're doing. And that kind of corresponds right now to this uptrend line, which is at 16,666. Isn't that interesting? Remember, 666 was the low of the S&P back in March of 2000. And look where it is right now, 2,000 it's already. So this, here's a couple of things that I like to do. I was asked, could I do one of those upside down things? I don't want to do the upside down just yet. I just want to show the blank chart of the Dow weekly chart. And what's important about this is it snuck briefly above, it hasn't closed, above those two candles that made nominal new highs. That's 17,153, then 17,156, 17,161, the week of the 5th of September. And then there was a lower high last week. And now we've just snuck in above. And that says, okay, a couple of things are happening. If you recall, the IYT made that pattern that I said could turn out to be the, was that in the monthly chart? Let me just quickly see. No, was that in the daily chart? No, I thought it was a weekly chart. Yep, in the weekly chart, the pattern that I said could turn out to be Groucho Marx's eyebrow from the left side, but this is really high. This, in fact, looks like a breakout pattern. In fact, this looks like if you go from there to there, that is, let's call that, no, I'll do it. If you go from here to here, and that's the transportation index, make a new parallel, and you go from here, from the low of the candle, look what's happened. You've almost got a one-to-one to the upside. So this is a very legitimate breakout in the transportation index, and you've got the confirmation of the crude oil pulling back. But wait a minute. Look how easy it would be just to draw a trend line all the way up and say, hey, look at that. That is interesting. This is the IYT. So now I want to put things together here so that you can see how important this particular, last week was really important. This week, again, is going to be very important. But I don't mean the week is important. It is the levels that we are hitting. So I'm making it real clear. When I was giving a talk recently, I said I'm making it real clear. A close in the Dow above 17,280 to 17,320, even just getting there, I have to consider that very positive. I hear the music. I'll be right back. I don't want to overstep the mark. I'll be right back. Dow's up 17, S&P's up 2.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back and you look at a chart. Very often what I do is I show these charts to subscribers and say, all right, let's look at this chart. And I make it a blank chart. There are no names, no nothing on it. If I got to take off the what do they call that again? Well, in the background, you've got the chart itself, the name of the chart. But at the same time, look at this chart. It's making lower highs, and now the lower lows are starting to come in with support. And it's saying that this trend line at the bottom here is beginning to give you evidence that if it was going to go one more time into a lower low, this trend line support, the inside track support line should contain it. If it goes below it, you've got the same Eiffel Tower pattern that you've had previously, single leg A failure pattern, and that would be the third time. Invariably what you get is in the scallops to the downside, the lowercase h patterns. I'm going to talk about one in Tesla in a moment. I had a request, and I think it fits exactly the patterns that we need to be looking at right here. This says that if there was a rally in this particular chart pattern that we're looking at, that rally not only has to go above the green line, it really has to go above the red line. Of course, we should be looking at this. This should be green and this should be red because this is the inside track containment area. But what is it? It is this Dow weekly chart upside down. But doesn't it give you a slightly better, a better picture than this one here? I'll take it away for a moment. Than this one right here. And And what this one looks like is you're making higher highs and higher lows, except now you're bumping into resistance. And what I will do here is I'm going to create this gray area. And so you see another gray area showing up. Let me just see this. No, I don't want to log in, become a member. Let's see. Go back. Just excuse me for 1 second. I need to do this. I want to see what you can see. And I'm not getting a picture. So let's go to the home right there. Airing, not what? Airing. Okay, this is airing. Oh, I'm not airing. All right, well, I'm sorry about that. So what's really important about this is that if you're looking at the weekly chart of the Dow, that inside, this has been a propellant zone. This area has, up until now, a couple of times been the repellent zone. So that allows the Dow to go a little higher and allows the Dow to go to the, well, it's a trend line that has been moving up. So from last week, now that trend line is a little higher than it was. Last week it was up to about 17,290s. Now it's a little bit over. This week it'll be in the 17,341 area. So those are the levels that I'd be looking at, because the decisive break to the upside says, start thinking about this trend line right here. That's what you got to be looking at. And this one right here, oh, you see, when you put too many charts on here, too many trend lines, after a while, it can get so fuzzy. All right, let's open this up a little bit and I'll explain what I'm looking at. So this major inside track will become the up channel focal points for parallel lines if, in fact, we break above that green line. And that says if you go at any point between now and next week into the 17,350s, because it's a rising trend line, that number keeps going higher, then be aware that you've really broken out in the weekly chart. There's every bit of evidence that says that was A, B, C, D, E, F. F right there with a down arrow, and this will then become an up arrow going to A and B. I should already do that, but because only the Dow has done it, I don't want to be kind of ahead of my time. It could turn out that, yes, this really is leg B, and in fact we do pull back, but we do not take 16,333. What was so important, you've got the people, the real bears out there saying this is the move that's going to go down thousands of points, and I'm saying not if I'm correct in interpreting my own Chapman wave methodology. It says you will not break under 16,333, and there's a much better chance that if you break out to the upside from here, the support is this entire inside track, which is rising and goes to 16,645, but in fact could turn out to be the green line. That makes the Fed's response today, the market's response to the Fed, that makes Friday by 4 o'clock the response to everything that's going on in Scotland, etc. We might find that Scotland turns out to be great, and that the new Alibaba turns out to be a big flop, a dismal flop. Why? Because they find out that there is tremendous something or other going on. Maybe it is the lack of copyright, lack of integrity for the goods that are on for sale there that have been hijacked, basically copied and sold indiscriminately without any regard for the ownership. We might find that. I don't know. I'm just talking out loud. So the weekly chart is real clear to me, and I'm going to be giving an update to my subscribers today at about 2:10, 2:15, somewhere around there after the Fed announcement, and we'll be making some decisions whether to go back into adding more shorts or whether to start looking at some longs. I'm very flexible here. There's some stocks that have held very well that I think can give some upside action. But more importantly, I'm looking at many more stocks that look like they're overbought and could come down as well as sectors. So this is my interpretation quickly. The resistance right now on a very short-term basis for the Dow is right there in the 17,190s. to 17, a quick pop maybe to 17,220. But if it doesn't stay, and by the end of the day you've popped up and then come back and gone to only a slightly higher Dow or a Dow down, that's going to say, heads up, folks. This is a topping motion, and we've got to look at least on the shorter term at this particular pattern here. So we're all about patterns, and I don't want to jump the gun by saying this is what's going to happen. I don't know what's going to happen. I'm just giving you levels to watch. That a Dow close under the 17,060 level in the next 2 days, it's going to be a very negative thing, and a pop-up into that 17,250s says, hoo-hoo, and it holds, says, you better be careful on the short side because there's a lot of action going on. I hope that clarifies to a certain extent. I have to wait for Friday, the close, to really tell you on a closing basis what this week's chart is doing. So on the candle. Okay, so we've got time now, so this is what I want to do. I'm just going to grab this. On the way to where I want to go, I just wanted to show that Tesla, the question was in the Chapman wave, the question is, Basil, I'm struggling with entries. Would you please help me? I'm looking at Tesla. I think it will pull back to make room, or maybe to raise cash for Alibaba. Therefore, I think it could move to the 240 level. That's an Ichimoku cloud level. Ichimoku, it's a way of looking at like a Bollinger Band. It's really like a group of Bollinger Bands, and then it clouds in a certain area that is tremendous support or resistance. I have a confirmation of this thesis with a dreaded H forming on the 60 and 10-minute charts. This is Tesla. Would you please help me see the proper entry short on the Chapman wave dreaded H? I've gotten her trying to do this several times. Thanks for all you do, your grateful student. So, what I'm going to show you here is, look how beautifully it worked there. Now, you would have got hurt because the first one worked beautifully for an H, but it didn't break down. Second one worked beautifully for an H, and then it did break down. Not only did it break down, it gapped down, and Tesla went from that support level on the left side of 272 right down to below the 200-period moving average. I'm going to draw this in because my guess is that Tesla is making some kind of a top here, and that I spoke about this last week, and I'll speak about it again. I think when Tesla starts to come down, it's going to be looked at as a battery company. When it goes up, it's looked at as an automobile company. And we'll see. I think we'll hear the phrases battery in a short while. But in the meantime, back to the ranch, where would the best shorting opportunity be? I think you could short it right here. 261 is 265, 264.70 for a 5.2% risk. Starting a position, I think that Tesla right here is not a bad short, as long as you realize that 1 penny over 264.70 at 264.71, you have to cover. So if there's another little bit of a rally going into today, you might want to just take a chance and wait. I would say, given 1 point or 2 points either way, I'd set it up right now. Why? Because this particular candle that we're looking at should, in fact, start to fade and come back down. And you will know you're right, because if Tesla goes to under 259.20 and holds there for 120-minute bar, or say 60-minute bar, that's going to say weakness is coming in, the MACD should deflect lower, and the histogram should start going back down again. And, of course, if it breaks out, that's going to be a new leg B in the 120. It's just a real clear way of looking at it. 2% risk, and you can start a position. I would add to the position if by it's going to be a volatile couple of days. No, I'd have to wait. I don't want to add too much risk here. Why? Because there's such emotional things going on here that you can really get whipped around before the trend gets established much clearer, which I think is going to be a downtrend, but that's thinking. That's not the reality. Hope that helps you. Okay, so now we're going to go back to this that I was looking at just yesterday. I wasn't going to bring it up, but it was brought up yesterday, and I discussed it. I'll discuss it again. This chart, my very long-term chart that I projected out way, way, way long ago. This started back in 1970. The low of in May at 627.46. Funny, we're talking about 666 on the S&P. This is 620 in the 620s on the Dow. It goes to peak ABCD in 72, pulls back in 73, 74, 75 starts a brand new move, and it goes up ABCD, pulls back, monthly chart. Dow goes ABCDE to the 81 high, pulls back, runs up ABCD D, phantom peak, but I counted it. It's the only time I've ever done that in this monthly chart, or most monthly charts never get phantoms. So breakout to new levels, phase 2. I spoke about phase 1, 1974 to 1981. I spoke about 7-year cycles because that's why it was brought up yesterday. I thought I'll go back and I'll show what I'd done 20 years ago, 87. 15, 16 years ago, approximately 7-year cycle that I noticed. Phase 2 was the breakout to new levels, that's 1982 to 1987. Period of recognition, phase 3, 1987 to 1994. This is period of ever-rising expectations, phase 4, 1994 to 2000. And then what happens is there was a period of pain, recovery, and then excessivity. And that was called phase 5, 2002 to 2007. That was the low. That was the 2002 to 2005. I was just talking about that as a particular phase, a constructive phase. It turned out to be. I didn't know it at the time, but that's what happened when it went to the low, down went to the low of 71.97 back in October of 2002. And now look what's going on. You've got the Dow, is that correct? Yeah. Then the Dow goes peak ABCD, and then it goes again ABCD, and it goes to E and a rare F, and that F is in phase 6. And that phase 6 says right here, in October of 2007 at 14,198. That creates a decline that took the Dow down to 64.69, March of 2009, trough D. And this trough, no, so was it trough E? I think it was trough, yeah, trough E. And that trough E started, the fifth lowest trough, started a brand new move, and we've gone peak ABCD, then you've gone ABCD, and now you're in leg E in the monthly chart, 17,151. 2 points higher in September, 17,173, and now 17,153, and now you've gone to 17,173. These tiny little incremental moves up say the trend remains up, but it's getting more and more difficult to really break out and have that peak go 200, 300 points higher. Instead, it's just nominally high, and it's just extending the move. So I've got a time price match that says from December of 2007, that's 7 years, from the 2007 high, it goes to 2014. But there's a chance that it might just extend a little longer and go into the first half of 2015. And that's where I think we've got to be real careful. And that's one of the reasons why I've been saying if there is a breakout here, we could break out in the Dow, dragging the S&P to new all-time highs. We could see a breakout that starts an accelerated move that just goes higher and higher and higher, right into the 18,000s and high in 19,000s. Now, the chapter that I wrote in the Psychology of Investing, the 13th chapter back in when the book was published. And my chapter was chapter 13, the mega bull market still to come. That was written in 1986, 87, and 88. Was supposed to be published by Barron's, but at the time, Barron's has always been too negative. It was just way too bullish for Barron's, so they pulled it at the last minute. But those levels that I was looking at then of 19,000, maybe even 21,000, that was all usurped by the NASDAQ. NASDAQ took every penny from all the other indices. So we might still see that the Dow could in fact do something like this. But I'll be back and we'll talk about that little coda section. This is the coda phase of, I don't want to talk about it. I hate talking about it. But I will talk about it when we get back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi folks, Basil Chapman here. It's Tiger Technicians Hour. Dow's up 19, S&P's up $1.41. Just kind of waiting around for some news. And what we're going to be looking at here is that in the pattern that I'm looking at here, I'm also showing the S&P monthly chart. I've shown this many times over the years. I showed this incredible series of channels that the S&P has been in from 1994. It was in a beautiful up channel all the way to the 2000 March high at 1552. Goes from 435 to 1552. Plummets down to 768 in October of 2002. Beautiful down channel. Then a beautiful up channel going back to retest the 1552 mark. It goes to 1576, 22 points higher, 24 points higher. And then on October the 7th, it comes down and a beautiful channel trough after F. Second time it makes a trough F, goes up, and each time we had 3 buy modes in the one that started back in 1994. But otherwise, there's 2 buy modes going to an E. This is the second buy mode, and it's in a D. And look how it's bumping up against that resistance. So I'm thinking here that a snap right through is something very different. But holding against that trend line says there's a lot of resistance, and we need to work that off for a little while. And then you can take a few months or maybe more to go to an E and maybe even an F in the next move to the upside. But I don't want to take too much time. This is looking into the future. I think our big problem is what's going to happen by Friday at 4 o'clock. So let's get rid of these things. I'll talk more about it over a period of time. Let's just go back to this because you've got Larry Pesavento coming up. Larry will offer even more details, I'm sure, about these different chart patterns that we're looking at. Now, let me just let it suffice right now to say 3 things are very, very important for me right now going into the Friday close. Number one, let me put the VIX index up here. The VIX made a leg E in the daily chart, is now making a peak E. But look what's happening. The Dow went to an all-time high and another one today. S&P is real close, not there, but real close. But the VIX index is 2 points above its recent low of 11.24. So even with yesterday's huge decline, and in fact we were long the VIX, and it was acting beautifully for us, and then we just got out in time. But look at this. On the 16th, it goes to 14.53. I should have put that in. 14.53. And what's very important about that number is that it squeaked above the 1427 high of peak D. And the low just before D was 1266. The low yesterday was 1272, and the low today is 1247. And it's trading right now 1314. It's come back very sharply. It's up 41 cents, in fact. I'm suspecting that unless the volatility index goes underneath 1180. Yeah, unless it goes below 1180 and closes under 1180 in the next 2-3 days, as long as it's holding around here, it's saying, hey, keep an eye on me because I am trying to build up some strength in my weekly chart to make higher highs and higher lows. And I don't care whether the Dow has made a new 3 things I said. So VIX is the most important thing. The Dow can go to a leg B here in the weekly, but it says that 16,333 should not be pierced under any condition if I'm correct about this being a new buy mode in the weekly chart, and that says that the 16,600s is probably going to be really important, 700s to 600s, right, using the Dow. The third thing that I'm looking at is how's the dollar going to act and react here, DXY. The dollar is just stuck. It's 1, 2, 3, 4, 5. This is the 6th session since the long-legged doji candle, and it hasn't broken in the index above 84.52. Does it spiral higher? Does it take next week to do that for a leg D to retest the 84.75 previous high of last year, peak F in the weekly chart? Does it break out? That starts, is that a G or a brand new A in the dollar in the monthly? A lot of things are going on. So I'll be back. Check out my opening.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TF TFNN.